On Tuesday, September 13th at 8:30 a.m. Eastern Time, the United States Bureau of Labor Statistics revealed that inflation had once again beaten expectations. Market forecasts had anticipated a 0.1% decrease in month-over-month CPI in August, whereas a 0.1% increase was the result. However, even bigger news was month-over-month core CPI coming in hot at 0.6%, double the 0.3% increase that had been forecasted. With annual core inflation in the US currently sitting at 6.3%, sharp declines in volatile energy prices are still not enough to bring the country's inflation train to a screeching halt. This gives the Federal Reserve further incentive to continue raising interest rates, which manifested in a surge of buying pressure for the US dollar this morning as the US dollar index jumped 1% intraday. With even a technical recession and rising unemployment rate unsuccessful in completely mitigating economic overheating, US dollar bulls may have fundamentals on their side for the near future. The following major pairs are ranked favorably for US dollar bulls by the Edgefinder, A1 Trading's software tool that provides supplemental analysis. Based on criteria ranging from fundamentals to trader sentiment, those who are bullish on US dollar may want to watch these pairs for potential opportunities to go long on the greenback. Moving right along to the pound, on Monday, September 12th, around 2 a.m. Eastern Time, the UK's Office for National Statistics reported that month-over-month gross domestic product, a key measure of economic output, had failed to meet forecasts. In our content, you may have noticed that we occasionally use our own proprietary software to research the markets. This market scanner is called the A1 Edgefinder, and it is a tool our team has spent a lot of time designing and updating. The scanner imports data on things like retail positions to see what retail traders are buying or selling. It also imports bank and hedge fund positioning so that we can get an inside look at what the big players are up to. Of course, we pay attention to fundamentals, so we program the tool to grab economic data in real time to help keep us up to date. If you'd like a copy of the tool yourself, we're doing a major subscriber discount when you use code A1YT at checkout. In the description below, you'll find a link to get access to the tool. By purchasing our software, you'll be supporting our research videos here, as well as getting access to an amazing tool. Again, use code A1YT down below. Now, back to the video. While markets and analysts had expected 0.3% or 0.4% growth, the reality was a disappointing 0.2%. Though not a contraction, it is yet another in a long list of unfortunate national events, ranging from the double-digit annual inflation to the death of Queen Elizabeth II. With newly elected Prime Minister Liz Truss taking the reins at a time of great economic suffering and a still wary Bank of England unable to halt supply-side woes, there is little certainty to be found for the pound sterling. With fundamentals, institutional sentiment, and technical analysis pointing towards continued GBP bearish momentum, let's explore which GBP pairs have the best selling potential. According to the Edgefinder, the three most promising pairs to sell are all GBP pairs. All three are experiencing month-long downtrends, with recent bullish price action retesting key levels in the form of resistance. Here they are, along with the respective Edgefinder signals: GBP USD, GBP CHF, and GBP CAD. Lastly, here's why the Swiss franc might be underrated. Forex traders have had a fair bit of news to chew on the past couple mornings. All eyes were on the European Central Bank as they implemented an anticipated 75 basis point rate hike, followed by a press conference, after which the world was treated to yet more commentary from Fed Chair Powell. Perhaps sliding under the radar was positive labor market news for the Swiss franc, with Switzerland's unemployment rate beating expectations by falling to 2.1%. This joins a long list of reasons to consider going long on the Swiss franc, as CHF might be underrated. Switzerland boasts many economic factors weighing in its favor, including its hot labor market, CHF's safe haven reputation, and GDP growth in spite of a recession-prone global economy. In many ways, it is comparable to Japan's economy, as both are high-performing, export-heavy economies that are historically comfortable with negative interest rates due to low inflation relative to other countries. However, one crucial difference between the two in terms of fundamentals is that the Swiss National Bank has proven willing to hike interest rates recently, whereas the Bank of Japan has thus far put off such a move. With Switzerland's annual inflation still creeping up, currently hovering at 3.5%, a 30-year high, more tightening could potentially be on the menu. Here are the best CHF pairs to trade. According to the Edge Finder, the following 3 pairs may be worth selling for the CHF bulls. Here are the pairs along with the respective Edge Finder ratings: GBP CHF, NZD CHF, and AUD CHF.